accounting equation. Assets is equal to equities. Equities will be divided into owner's equities and outsiders' equities. The outsiders' equities are called as liabilities and owner's equities are called a capital. Accounting equation can be written as under: assets is equal to liabilities plus capital. Transaction and accounting equation. When a transaction takes place, it affects in terms of increasing or decreasing the three basic components of accounting equation. To illustrate this concept, the following business transactions are assumed. Mr. Irfan started business of printing by introducing rupees 2,200,000 in the name of Irfan Printing Services. The effect of this transaction will be that the cash will increase in the business by rupees 2 lakh and owner's equity or capital of Mr. Irfan will also increase by the similar amount. The equation will appear as follows: assets, cash, rupees 2 lakh is equal to equities, owner's equity, Irfan's capital, rupees 2 lakh. It is important to note that while analyzing the business transactions of an enterprise, we are concerned with the business activities of the enterprise, which is treated as a distinct entity from its owners. Therefore, when something is paid in by the proprietor, it is treated as increase in business assets on one hand and increase in owner's equity or capital of the owner on the other hand. When the owner receives back something from the business, it is treated as decrease in owner's equity on one hand and decrease in the business assets on the other hand. Irfan purchased building for rupees 1 lakh and paid cash for the same. This transaction will change the composition of assets. The cash will decrease by rupees 1 lakh and building will increase by the similar amount. The equation will now be as follows: assets, cash, rupees 1 lakh plus building, rupees 1 lakh is equal to equities, Irfan's capital, rupees 2 lakh. Irfan purchased machinery worth rupees 1,50,000 from Liaquat and paid rupees 50,000 in cash. In this transaction, the assets, machinery, will increase by rupees 1,50,000. The claim against this asset will be of the owners up to 50,000 and outsiders accounts payable Liaquat rupees 1 lakh. The cash will decrease by rupees 50,000. Now the equation will be as follows: assets, cash, rupees 50,000 plus building, rupees 1 lakh plus machinery, rupees 1,50,000 is equal to equities, Irfan's capital, rupees 2 lakh plus liabilities, accounts payable, rupees 1 lakh. Irfan purchased material and supplies for rupees 30,000 for cash. The effect of this transaction will be increase in assets, materials and supplies and decrease in cash, equal to rupees 30,000. The new equation will be as follows. Assets, cash, rupees 20,000. Building, rupees 1 lakh. Machinery, rupees 1,50,000. Supplies, rupees 30,000 is equal to equities. Irfan's capital, rupees 2 lakh plus liabilities, accounts payable, rupees 1 lakh. Irfan received an order of printing work from Shaukat, who paid rupees 35,000 in cash and promised to pay rupees 15,000 later. The order was completed. This transaction will increase the owner's equity by rupees 50,000 on the equity side, while cash rupees 35,000 and accounts receivable rupees 15,000 on the assets side. The new equation will be as follows. Assets, cash rupees 55,000, building rupees 1 lakh, machinery rupees 1,50,000, supplies rupees 30,000, accounts receivable rupees 15,000, equities, owner's equity, Irfan's capital rupees 2,50,000, liability, accounts payable rupees 1 lakh. Irfan paid rupees 50,000 to Liaquat on account. This transaction will decrease cash by rupees 50,000 and accounts payable will also decrease by the same amount. The new equation will be as under. Assets, cash rupees 5,000, building rupees 1 lakh, machinery rupees 1,50,000, supplies rupees 30,000, accounts receivable rupees 15,000 is equal to equities, owner's equity, Irfan's capital rupees 2,50,000, liability, accounts payable rupees 50,000. Following expenses were paid for the month. Salaries rupees 500, tax rupees 200, carriage rupees 100, general expenses rupees 200. The effect of above transaction will be decrease in cash and decrease in owner's equity. The total amount of expenses is rupees 1,000. The new equation will be as under. Assets, cash rupees 4,000, building rupees 1 lakh, machinery rupees 1,50,000, supplies rupees 30,000, accounts receivable rupees 15,000 is equal to equities, owner's equity, Irfan's capital 2,49,000, liability, accounts payable 50,000. Materials and supplies used out of inventory was valued at rupees 25,000. The effect of this transaction will decrease in owner's equity and also decrease in supplies inventory. The new equation will be assets, cash rupees 4,000, building rupees 1 lakh, machinery rupees 1,50,000, supplies rupees minus 25,000, accounts receivable rupees 15,000 is equal to equities, owner's equity, Irfan's capital 2,24,000. Liability accounts payable rupees 50,000. In the above illustration, it is shown that the effect of every transaction can be stated in increase or decrease in one or more elements of the accounting equation so as to maintain the basic equation assets is equal to equities. Summary of illustration. The transaction of Irfan printers are summarized in tabular form.